Welcome to another S&P 500 analysis. Today is October 28, 2022. The S&P 500 continued to move up since the October 13 low. The market has been reading every little tidbit of economic data and interpreting it as a reason for the Fed to slow down the rate hike and might even do a pause. So will the market get the nod from the Fed next week when it announces the next rate hike? And will Jay Powell acknowledge a slowdown on the hike is appropriate at this time? Or will he smack the market and tell us to stop guessing and just watch the Fed's action? And the Fed's plan is to keep hiking until a full-blown recession has occurred. Sure, Jay Powell might be comforting those that are hoping for a soft landing by telling them a soft landing is still possible, but not very probable. In this S&P 500 analysis, we'll review the market sentiment, the internals, the price action of the S&P 500, and the other major market indexes, and see how we should prepare ourselves for next week's FOMC announcement. Stay tuned. On this weekly chart of the S&P 500, as you can see, the range for the week was 163.77 points, and it gained 148 points, or almost 4% for the week. Now, it's still close above this pre-pandemic high, and also it closed above this declining 10-week moving average, and also closed below this 40-week moving average. And it still continue to form this lower low, lower high pattern. And looking at this sentiment chart here, as you can see on Friday, the S&P 500 closed up almost 2.5%, a little bit over 93 points. And here, since the October low here and to Friday's high, it had moved up over 400 points. It moved up 413 points, or almost 12%. As you can see, the VIX is coming back down, and it is inside of this 20-30 zone. And also the put-call ratio is below 1. But it's still inside of this 0.7 and 1 zone here. So the market participant is not totally complacent or fearless, and not totally risk-on. It is still in a little bit of a cautious mode, and also in hedging mode. And here we see the up-down volume ratio on Friday with a 2.5% gain and almost 94 points of gain. The up-down volume ratio was only a little bit over 2-to-1 in favor of the up volume. And on the daily advanced decline, only 1,665 more advancing issue than declining issue. On a typical 2.5% gain, we would expect this advanced decline to be over 2,000 at least, and also the up-down volume ratio of at least 6 to 8 to 1, 6 or 8 to 1, somewhere there. So this rally is not that strong, or it is not that broad-based. It's a little bit of the suspicions here about the strength of this rally. Most of the gain is coming due to Apple, because Apple gained over 7% today, I believe. But we'll look at Apple on my Sunday video, so be sure to keep an eye out on my Sunday video, where I will go to the Apple and some of the FANG stock that reported earnings this week, and also we take a look at the SPY, QQQ, and the IWM. And looking at the New York Stock Exchange, new high, new low, the good thing is that the difference between the amount of new high and new low is narrowing. And right now, there's only 23 more new low than new high. On Friday, 91 stock made new 52-week high, and 114 stock made new 52-week low. Here we're looking at the cumulative advanced decline for the New York Stock Exchange and the S&P 500 on a closing basis. And the things that we've been highlighting is regarding to the little bit of a negative divergence here. We see that the S&P 500 closed with a higher high close, but the advanced decline is still trying to get above this pivot high. So we are seeing a little bit of a negative divergence unless the advanced decline come up, or the S&P 500 come back down. So those are the two possibilities of resolving this divergence. And here, looking at the NASDAQ 100, as you can see here, based on the October low, to Friday's high, it gained a little bit over 10% or just a little bit more than 1,100 point. And on Friday, it actually gained 3.17%, or close to 355 points. And looking at the up-down volume ratio, it's only 2.7 to 1 in favor of the up volume. So again, similarly to the New York Stock Exchange, the up-down volume ratio was not that strong when you see a market gaining 3% or more. And the advanced decline on Friday only had 1,737 more advancing issue than declining issue. So again, although there's a little bit of a market participation, but it's not as broad as we would like to see when a index is gaining a little bit more than 3%. For a NASDAQ, we'd like to see this somewhere around 2,500 in that area. So again, so kind of throw in a little bit of a caution about this or suspicion about this rally here. And a positive thing in the NASDAQ market is also the new high, new low. The difference between the amount new high and new low, it is narrowing. And in the NASDAQ on Friday, it was only 75 more new 52-week low than 52-week high. There were 121 stocks made new 52-week high versus 196 stocks made new 52-week low. And on the NASDAQ cumulative AD line, similarly to the New York Stock Exchange, we are seeing a little bit of a slight negative divergence here. You notice that the NASDAQ 100 closed at a higher high here, but the advanced decline, the cumulative advanced decline, is still under this below this pivot high. So overall, the market been rallying pretty impressively in terms of the magnitude, but the advanced decline and also the up-down volume ratio is not that impressive to support this type of a strong rally and a continuous move up. So be careful. I think there could be a little bit more upside, but I think if we see a stall in this rally, we could see some major selling come in, and especially when next week the FOMC meeting, the FOMC announcement, and also Jay Powell's press conference, that could generate some reaction. So depending how the market reacts, so I will be cautious for the coming week and be very careful trading into the FOMC meeting or the FOMC announcement. Now, looking at this 10-year yield, we can see that the 10-year yield pulled back to somewhere around this 4% level, but it is still holding this uptrend here. So I wouldn't be surprised to see this come back up and take out this high here and get above this 4.3 level. Remember, the Fed is basically targeting somewhere 4.25 and 4.5. So watch this. This could continue to move up after next week's FOMC rate hike announcement. And here on the US dollar, you can see that it pulled back to this 109.5 level, somewhere around here, and it got a little bit of a bounce. Now, doing a little bit of a parallel line here, kind of maybe this could be a little bit of a channel or a little bit of a bull flag. And if we continue to see the dollar to bounce up, then maybe we could see it come up to this upward trend line, see would it break this and get back above this 114.5. And again, I'm basically still looking for this 117, 118. Now, if it continue to pull back a little bit, then we probably will see this confluence here with this trend line, also this support area, and this lower channel trend line here, and that would basically put it somewhere around this 109 area. So we could see the dollar might pull back to this 109 and then get another bounce back up. And looking at the crude oil, you see that crude oil just continues to bounce off of this 85 area. Right now, it seems like it's bumping up maybe against this trend line, and also sitting at this point of control, this composite POC. So I'd be watching for the coming week to see crude oil could move above this trend line, get above this pivot high here, which is somewhere around 93. And if it does, then I wouldn't be surprised to see crude oil start making another run up to this 107 area, 110 area, get back above the 100. And here looking at silver, it's still holding up above this $18 area here that it got the bounce off. And right now it's basically back testing this high volume area. So we'll be watching to see if silver could come up and take out this zone here, essentially get above the $20 area and possibly move up toward the 22. And for gold, gold is still kind of struggling. It's still trying to hold this support here near this 1650 area, with the US dollar pulling back, and we are not seeing much of a bounce on the gold. Maybe it is anticipating that the dollar will, move back up relatively soon after the FOMC announcement. So watch gold to see would it be able to get a bounce back up to the 1700 level. But if it break this 1650 area, then I'd be keeping an eye on down here, maybe possibly down near this 1600 area here to see would it be able to find some support. Now let's take a look at the price action, starting with the S&P 500 on this daily chart here. You can see that the last week it closed right above the upper range of the expected move. And the high on Friday was just a little bit over 39.01. And it closed at 39.0105. And here is the next week expected move. The upper range is between 4,050 and a little bit over 4,019. And the lower range is 3,782 and 3,760. Now, in addition to that, I also have put in a expected move for the FOMC rate hike announcement that's to occur on Wednesday. And the upper range is 4,021 and 3,995. And the lower range is somewhere around, let me see here, 3790 and 3807. Okay, so that's the lower range for the expected move for FOMC announcement day. In addition to that, notice that I also mark off the Friday's close, and it is still 19% below the all-time high here. So although it is not in a bear market by the definition of 20% or more, it is sitting right at the edge of it, even after this tremendous run since the October 13th. Now let's take a look at some of the scenarios, some of the possible scenario here. Let me just, move this up here, and we can take a closer look. The first thing is we probably will see some kind of a pullback and possibly back test this pivot high here. That's near the somewhere around just above the 3,800 level. Okay, so we could see a little bit of a back test and then possibly make a push up toward the upper range. And if it break through the upper range, then we probably be looking at this trend line here, and which is would be in confluence with somewhere around 4,100 level. Now, and then on the downside, if it pulled back and unable to get a bounce here, instead of to continue to move down, then we're essentially looking for this lower range of the expected move to get tagged and possibly come down and test the June low once again. Okay, that would be down here near the 3,050 area. Some of you might have seen, this pattern here, right? And might have interpreted this as a little bit of a inverted head and shoulder. So if you do, that's fine. Yeah, I mean, everybody have their little own visualization of what pattern looks like. And I want to give you a little trick on using the Fibonacci extension tool, so you could easily and accurately project the major move. Okay, so in this case, we essentially want to look at this as this is the neckline or the breakout here. So we essentially measure the height of this, this head here, and then project this up, with the equal distance, and that would be a major move. And that's basically is the 100% major move. Now, here's the trick that I'm going to show you how to easily do that. And essentially using the Fibonacci extension tool, not the Fibonacci retracement tool, the Fibonacci extension tool, and set it to 0 and 1. And if yours is using, 0, 100, 200, set it at 0 and 100. Select Fibonacci extension tool and just start from the low where you want to measure. And this is the baseline that we want to measure for the breakout. And just, highlight that, point, start and stop there. And you see this 100%. It project up at almost 4130. And that's pretty much in confluence with this trend line. If this pattern is going to play out to the 100% expected move. Now, I also have a 618, and you could have a 80% or 72 or whatever. But the convention wisdom is to use a 100. But I also sometimes check the 80% level. They kind of give you some idea, and also a kind of neat, accurate way of measure or project that major move. And the other way to use this also is, for example, if you want to use it to look at the symmetry move, right? The symmetry move is essentially, you take this move here, and here's your pullback, and then you project this distance from this pullback, and you project it up, and that is what we call the symmetry move, right? And again, that's a 100% move, right? So you essentially use the same tool, the Fibonacci extension tool, and start off from where you want to measure that distance, right? This is a symmetry move that you want to measure to project, and then you go down to where you want to pivot, and right here. So here's that 100% projected move on the symmetry move, which would be 39.28. So those are the little trick that is a little bit easier to, instead of, drawing lines and then try to copy it and then move it and then project it up. Oh, by the way, just to show you the setting that I have, right? For example, on this here, on this, using this as a symmetry move measurement. And let me show you, I'm using the Ninja Trader platform. Almost every charting platform have the Fibonacci extension tool. If it doesn't, you should really go look for a different charting platform. So what I did is, this right here, in this platform, you use the percentage. So instead of 0 to 1, it's 0, 100, and so forth. So I basically have this 0 check on the visibility, right, and the 100, okay? So all the other one, the setting, I just don't use, okay? I got 618 also. Yeah, I do have 618. And 127, so 141, 161, 200. So that's how you do it, is to set it to the level you want. You make sure you set it to 100%, or that 1 if you do 0, 1, 2, 3, 4, and so forth. 0.61, 8.382. And set it to 1, and you would be able to use the tool to easily do these type of measure move projection. And here we are looking at the NASDAQ 100. I also put in the measure move, the projected move for the lower range and upper range. Usually don't use that because the liquidity of that is not as high as the SP500. I would rather just look at the QQQ, because you trade the QQQ anyway, unless you trade the NQ, which is the E-mini, NASDAQ 100 future. Then you look at the NQ, for that projected move. But here you see I've used the NDX, which is the NASDAQ 100, and the lower range expected move, lower range for the coming week is 11,108 to 11,025, and the upper range is 11,985 to 12,075. Okay, again, we look at this here. We saw a little bit of a maybe trying to form this inverted head and shoulder pattern. So again, use that Fibonacci extension tool that I just talked about. And if we set that here and use that to do a little bit of a projected move, we could see that here's the baseline that we want to break above. And that 100% measure move will put it up near this 13,000 area. And also I have a little bit of a price zone here as well. So, and bump up against this trend line also. So you got a little bit of a confluence here near this 13,000 if this pattern form and it break out, right? So so that's a little bit of a sidetrack here on the pattern analysis. Now the other thing is, if we are looking for this thing to move up, then I expect to look at this 50% retracement level to get taken out and move up to the upper range. between 12,075 and 11,985. Then if it could break through and move to the zone, then like we just did a little bit of a projection from this inverted head and shoulder pattern, then we're basically looking for this thing to come up to above this trend line here and possibly move toward the 13,000 level. Okay, that's the upside move. And then for the downside is essentially come back in and maybe check the lower range. And the lower range happened to be priced in right near the June low for the NASDAQ 100. So it could come down and maybe check this and maybe we'll get a bounce here. And that's how we're going to form that inverted head and shoulder pattern. Or if it doesn't hold, then we basically are looking for this thing to possibly move down to the 618 and check the October low down here near the 10,500 level. And here's the Russell 2000. The Russell 2000, you can see that we can look at this as a little bit of a double bottom or a little bit of a consolidation breaking out of this consolidation zone here. So if we take a look at that, and again, assuming that this right here is the band that we are looking at, and we want to do a major move projection. So once again, we're gonna resort to our little Fibonacci extension tool and use this this tool here and project up. And let's say this is the baseline here. You could do this, and so here's this 100%, and that would be somewhere around 1910. So it's above this 1900 area and right above this 382 extension of retracement. So we could look at that as one of the possibility for the upside scenario is maybe after it do a little bit of a back test, this baseline, and then break, move back above this, 1910 area. Okay, so that could do a little bit of a fake out for those people that play this breakout here. Maybe shake them out a little bit and then go back up. So again, you could also use this as a symmetry move as well, right? Assuming that this is the symmetry move, that we get this right here. Let me do this here, and so we get this symmetry move, and then maybe we pull back here, and then we project this up here. Okay, so let's play some what if. And if we do that, so let's go and use our Fibonacci extension tool once again. Oops, let's start off here, okay? And we assume that it's going to pull back to this baseline here where it break out, okay? And then bounce. So again, this 100% major move is basically put it up at the upper edge of this zone here, okay, right near 1922, okay? So you could use this tool to do a lot of projected move thing and just kind of play some what if scenario. Now for the downside for the IWM next week, if it come down and doesn't get a bounce here and come back, then we look at this 50% retracement somewhere around 1712, and then if that doesn't hold, then we're essentially looking at these bottom down here near 1650 area. And here's the Dow Jones Transportation. See, the Dow Jones Transportation is still 25% below the all-time high here. And it broke out and filled this gap here. So right now, we're basically looking to see would it be able to get above this 382 and move up to this trend line or get up to this 14,500. That would be on the upside. And on the downside is come back and maybe come back down to this 50% level. Essentially this area here at 12,363, right? So you could look at this right here as a little bit of a triangle pattern, right? Okay, so we look at this and you basically are looking for a expected move, project up here. And once again, we're going to be using the Fibonacci extension tool and use that and project this up here, right? So you can see that it project up pretty much in confluence with this trend line. And here looking at the Dow Jones Industrial, look at the Dow Jones Industrial. It's only less than 15% below its all-time high from Friday's close. Now here you see that we could see this look like a little bit of a double bottom here, right? A little bit of a W. and got a breakout from this pivot. And right now it seems like it might be shooting up here to this 32,000. So let's go and use our Fibonacci extension tool and project that to see how close we are at that particular level. Okay, so let's do this. And so it's getting pretty close, right? Right here at 32,183. And there's a zone here just around this 32,000. So for our upside scenario for the coming week, maybe we see this continue to move up and do out this expected move and do a little bit of a pullback and then continue to push up to this 33,000 area. Or the other possibility is to pull back, and then check here, double check here on this breakout pivot. Then we could do a little bit of a symmetry move, right? Again, we basically assuming that we got this little movement here and then pull back over here. Now, on this pullback, that's too steep of a pullback. It's almost 100% of this major move, this projected move here, the symmetry move. So instead of using that, we're going to use here, okay, and do this and then project this down here and then push it up and then see what do we get in. I could tell you right now, it's look like it's basically it's just a double bottom. So it probably would not be a good thing to do. So, but anyway, we'll go to the exercise just to kind of get a little bit more practice on how to do this projected move. So this slightly above this 32,183. This right here is 32,383. So close to this 32,500 or close to this trend line here. So you could also do this to do this projected move. Now for the downside scenario for the coming week, if it continue to pull back here and it doesn't get a bounce back up at this pivot, then we look for this W bottom here. This right here possibly get checked, and that would be somewhere down here at 29,000 level. And finally, the New York Stock Exchange Composite. Again, we are looking at this little bit of a double bottom here. Look out at this pivot. So right now, it seems like you want to move higher and possibly try to get toward this trend line here. And also look at the from last Friday's close. It's only down 15% from its all-time high here. So definitely the New York Stock Exchange Composite and the Dow Jones Industrial seems to be the outperformer. That perform much better than all the other indexes, because they are down the least from the all-time high. So again, we basically are looking for some potential upside. And if we get a pullback, maybe check here somewhere around this 14,400 area and then get another push, right? Or if it unable to get a bounce off of there, then we essentially looking for this bottom here to get retested. So if we take a look at this, extension tool once again, right? And use this to do a little bit of a projection, which is up here. And we see that is somewhere around 15,430. So maybe we close to the 15,565, this zone here in Confluent. Or you can see that is also up here near this pivot high here. So that's how you use the Fibonacci extension tool to kind of help you project some possible target here. So I hope you found this little tutorial and tips to be useful and found this video to be informative. So be sure to smash that thumbs up to help me promote this video on YouTube. Thank you for watching and stay safe.